welcome to the first, I would say, impromptu episode of our new podcast with Greg Kidd. Impromptu in that, there was some big news right before the holidays, which we'll get into in a second. Why don't we start off with you, Greg? Do you want to just take a second and introduce yourself?
Thanks, Alec. Hi, I'm Greg Kidd. I'm the CEO of GlobaliD, which works on self-sovereign identity that's portable. And I'm also the co-founder of Hard Yakka, which is a investment company that invests in what we call the sovereignty stack, projects that put people at the center of the universe and build around that, as opposed to top-down structures where people are under corporations or governments. That's our investment thesis.
Very cool. Okay, so let's just get right into it. As I'm sure a lot of you already know, right before the Christmas holiday, the SEC launched its lawsuit against Ripple, essentially saying that XRP was a security and Ripple had been involved in selling unregistered securities for the past 8 years. Greg, I know you have some very strong opinions on this. Why don't we start with your hot take?
Well, first off, I'm an ex-regulator myself. I work for the Federal Reserve at the Board of Governors in the payments group. And just my observation is, and again, I'm not a regulator now, but that just wasn't the way we did things at the Fed. You didn't launch litigation on the last day before the commissioner of your organization resigned, especially going into like a new administration. I mean, Ripple's been around for 8 years. There's been a long time to set clear rules, and then you could have arguments or discussions over what behaviors need to change to meet the rules. But to actually just file an enforcement action out of the blue on the day that you resign, so you're not around to actually take the heat for the consequences of what you've done, and then you just sail off into the holidays and a new administration. That's kind of an unprecedented situation. The question is, what was the reason after 8 years that required an urgent enforcement action just on the last day of under a particular leadership? And so this is a highly unusual situation, just to start with, in terms of the conduct of the SEC, independent of the substantive issues of the case. So it does have me scratching my head as to why this timing, why in this manner, and then we can just climb down into the specifics of the actual case. What's known as the Howey test, which is the test for whether something is a security or is a currency. And really, from my point of view, it comes down to whether an organization like the SEC thinks that people out there can't tell the difference between investing in a gold mine, which has its own stock, which truly is a security, versus gold, which is pretty clearly not a security. And so in the case of Ripple, as you said, Ripple was a company that did raise money from venture capital. It does have investors. I'm one of those investors. I know the difference between when I'm investing in a company versus when I'm investing in something that might have been associated with that company, but is not an investment contract of that company. And that's XRP, which I'm also a holder of. And the SEC has taken the point of view that people don't know the difference, and it is suing to recover $1.3 billion on behalf of those investors, and in the process is destroying tens of billions of dollars of value for those investors. And it does remind me of a quote from Ronald Reagan, who said the scariest words in the English language is, I'm from the government and I'm here to help. So when somebody comes to help me as an investor, which is the primary mission of the SEC, and helps me by destroying, 10 times the amount of value that they're quibbling over, you got to scratch your head, because that just doesn't really make sense from a public policy point of view. It doesn't make sense from a financial point of view. And so it really, begs the question. So that's,
Well, I mean, speaking of that question, what do you think the goal of the SEC was, right? Because generally speaking, they're there to make sure regulations are followed. They're there to make sure the rules are followed, and ultimately, the responsibility is to protect the consumer. So, what do you think they were trying to get out of this particular case, especially in the context of, like you said, dropping it right before the holidays and right before this administration is moving on?
well, to me, this feels like a turf battle. Again, I come from the U.S. regulatory industry, and there's always a question of like, what does the Fed do versus the OCC versus state regulators? And in this case, the question is, who gets to be the boss of cryptocurrency? Is it FinCEN? Is it the IRS? Is it like some other federal regulator? Or in this case, the SEC is saying like we want to be the boss of crypto. Yet we don't want to like lay out like clear rules and whatnot. But this clearly is a chance for them to say, we get to have a big say about how crypto works. Yet at the same time, we don't have the responsibility for putting out a clear set of rules, even though it's been 8 years. And they could clarify like, why is Ripple, in their mind, an investment contract, but Ethereum or Bitcoin is not, and also give guidance to all the other companies that are arguably in the same position as Ripple. It could be a Filecoin or a Stellar, Tether, Brave. I mean, those are all companies where there was a stock by the founding company, and then tokens have been issued, and those tokens have been sold to members of the public, and are held broadly, not just by accredited investors. And so, the ironic thing here is if you read what the mission is of the SEC, it's to protect investors, to maintain fair, orderly, and efficient markets, and facilitate capital formation. If you go through each of those 5 things, protecting investors, is this fair? Is this orderly? Is this efficient? Does this promote capital formation? And in every one of those checkboxes, this action achieves exactly the opposite outcome. Investors have been harmed. This certainly isn't fair because you can't understand why Ripple and not Tether or not like Stellar, not like any of those other lists or Bitcoin or Ether. You're not making clear what the distinctions are. It is certainly not efficient or orderly. I mean, there's been chaos in the marketplaces. Folks don't know whether to list or delist. There's problems with liquidities. Loans are being called. I mean, if you wanted to create a situation that was a parallel to like having like Lehman Brothers go down without clear and orderly wind down, I can't think how you could create more chaos in the marketplaces than just to file an enforcement action with no context, on the last day of the commissioner's leadership of the SEC.
Sure, and I think you speak to the impact of this, right? We've already seen exchanges like Bitstamp and Coinbase. They've chosen to delist. As sort of a retail user myself, that's difficult for me because I do hold cryptocurrencies, and now as a U.S. resident, if I do choose to sell down the line, I no longer have that option, right? In Bitstamp's case, if you live anywhere else, you can still trade XRP. I guess the question is, what sort of impact do you think this has on the U.S. for this industry? Because as you mentioned, the regulatory clarity still isn't there, right? And so it feels like there's sort of now a cloud hanging on all these other tokens and companies you've mentioned, projects like Filecoin, projects like Brave, et cetera.
Well, the interesting thing is the U.S., which is supposed to be this bedrock of stability and predictability. When I have like a partner firm that's a venture capital firm out of Bulgaria telling me it's too risky to invest in crypto projects in the US because the regulators there are acting like cowboys. When the Bulgarians are telling you that your country is acting like cowboys, that's pretty scary. And so this is just another kind of nail in the coffin for innovation and competition from the United States. It just is basically a way of signaling that, innovation and competition not welcome here. It'd be one thing if, what the SEC was doing was in lockstep with regulators around the world, but in no other country has any equivalent of the SEC stepped in to call a cryptocurrency like Ripple a security or an investment contract. That is just hasn't happened anywhere else in the world. So this action, again, to me, looks like a turf battle, which is the SEC trying to expand its scope using something called the Howey test, which was a test that was used to figure out whether a farmer selling 1 acre lots for fruit trees, that he could then still continue to harvest the fruit on those. That Supreme Court case in 1946, which established that selling land under those conditions could be considered an investment contract, could actually be applied in 2020 to basically punish a company like Ripple for having a stock and a currency. That is got people's heads spinning in other countries around the world. I still think the US is a great place to do business. There's lots of venture capital here. There's deep markets. There is mostly law and order. It's not always a Tony Soprano situation, but we do have our pockets of kind of I don't know what else to call it, but gangster regulation, where it's, regulation by enforcement action rather than actually writing out the rules and doing the hard work of saying this is what you want you to do so that you are clearly a currency or a commodity or a derivative or a security. There's no reason. In physics, we know the difference between a solid, a liquid, and a gas, but in the United States, and uniquely in the United States, we have this confusion as to what's the difference between a duck and a dog. And so the SEC has really ramped up that confusion here by launching this enforcement action without any clarity about how these rules would apply to any other company than Ripple. It's a complete vacuum in which we're operating in, because general principles are not being established here.
I guess part of the challenge now is, regardless if the SEC's case has merit, et cetera, these lawsuits take a long time generally. You have more experience probably on the regulatory and legal side. Do you have any perspective on sort of the timeline that we're looking at, and what are sort of the milestones we should be keeping an eye out on?
So this is one of the challenges with having a fight with your regulator. For instance, PayPal is having a fight with the CFPB right now as to whether their digital wallets are prepaid cards. At the CFPB, they waved a wand and they didn't really think much about digital wallets, and they didn't have legislation covering them, so they just call them all prepaid cards, those pieces of plastic you buy at 7-Eleven. And that has consequences when you take 15 years of innovation and you stuff it into a time machine and go backwards. And now PayPal is in the unenvious position of either you lose the lawsuit that you're filing, or you win it, and all you do is you poked the bear, not in the butt, in the eye, and now you just made your regulator mad. And so the challenge with a lawsuit with a regulator like the SEC is, if you lose, you lose. And if you win, you sometimes lose, because the regulator is still just mad and upset that you have not recognized their authority. Forget about the principles of the issue. If their authority has not been recognized, then that's a challenge not just to some particular set of the rules or the law. It's a challenge to their reason for being. And so Ripple needs to be careful, and I think they are being careful, to be respectful of the authority of all the regulators, and to say, hey, guys, we respect your authority. If you guys are having a fight between yourselves as to whether something's a commodity, a currency, or a security, could you please have that fight? This isn't Godzilla versus Mothra with us just being the city of Tokyo getting destroyed as you roll over one another. Please work it out amongst yourselves. We're happy to comply with the rules, but we can't be a gas, a liquid, and a solid at the same time. That's not possible in physics. And if you have to be those three things at the same time in financial services, that's an unlivable space. So please work it out amongst yourselves. We don't want to have a fight with the regulator. We just want to have clarity, and clarity is really the key thing here, and that is what is absent. And really, there's no dialogue that I can see between the CFTC, the IRS, the SEC, FinCEN, the other banking regulators, the state regulators. They're not talking. They're just each carving out their dimensions of power, and that collateral damage is for innovators, for competition, and investors, and really consumers in the space, because someone like you who just might have like Ripple and might want to be able to spend it to buy a cup of coffee, that's all become complicated and uncertain now. So that's the unfortunate collateral damage that happens when the regulators in this case can't decide what the boundaries are between who gets to have a say over what.
As you mentioned, there is this unique situation now with a regime change, right? At the SEC, Jay Clayton I think he's already stepped down at this point.
Yeah.
As someone who's worked at the Fed, how does that work, right? Because the body has more sort of longevity than the individuals that are working there. Could there be some sort of new approach to crypto as a result, or they have these legacy lawsuits, they're going to keep leading that flag?
Well, I think the new administration will respect all the litigation and actions that the group before has taken. I don't think this is really a Trump versus Biden, Democrat versus Republican thing. I have to say that neither the Democrats or the Republicans, nor Biden versus Trump, or none of them have had a particularly thoughtful, insightful perspective on cryptocurrency or blockchain. I mean, they still tend to look at it as a technology. They haven't really accepted the fact that there could be, for instance, a world where currencies are not just created by governments, but they could actually be created by private actors or not-for-profits. This really goes back to a question that was raised by the philosopher Hayek back in the 1970s. He wrote a book on the denationalization of money, that money doesn't have to be created by governments. In fact, governments, especially in a time of a pandemic or the financial crisis, has incentives, especially under times of populism, to debase the currency just to print more money. And there may be other forms of money that are more trusted. And both the Democrats and the Republicans in the United States, conservatives and liberals, they all have had or shown a proclivity for doing things with money that might be great for the government, but aren't so great for rank and file people, that people's savings can get debased. And so it's not clear that a new administration is going to make things better, or simply say, oh, wow, that was crazy what Clayton did. We're going to stop that. The wheels of the bureaucracy, and I say this as someone who could arguably be a representative of the deep state. It's been started. It doesn't just end because a new administration comes in and a new commissioner comes in. What may happen is somebody comes in that has a reasonability test and is actually taking the mission statement of the SEC seriously, and is going back and looking how the case actually stacks up against the mission, and will actually try to have clarity come out of this. I mean, there could be a good outcome. I mean, if out of this comes clarity, and for instance, they say, look, you're doing these kinds of disclosures, we want you to do those kinds of disclosures. We want you to have these kinds of pre-announcements. It's basically a rules of the game kind of argument. If what comes out of this is clarity, then that's great. And so it's not all bad. If what you get out of this is clarity, that's great. And to some extent, they picked on Ripple because Ripple's sort of the largest, it's the first, it's the biggest. And so, if out of this comes clarity for all the other cryptocurrencies that are out there, that do have a sponsor organization, well, that's a hell of a progress forward. And maybe the US will move from being like the quagmire in this regard to being the leader once more. It could happen. I mean, stranger things have happened. And I'm ultimately an optimist. I'm not like getting on a plane and moving out of America and crying because, the SEC like put in a dig at Ripple.
Yeah, I think for me, that was sort of the positive perspective, which now this is an opportunity, right, for clarity. In part because Ripple is sort of uniquely positioned to fight this a little bit, and they also have the will to do so, right? Because I think a lot of the others sort of backed down immediately. I think Telegram pulled their entire project once the SEC got involved. So maybe I'm not a legal expert, but what do you think about digging down into maybe some of the arguments that the SEC is making against Ripple, and just the classification of cryptocurrencies as securities in general? I liked your analogy of the gold and the gold mines, because obviously if there's a lot of demand for gold, there's the price of value of gold mines will go up as well. What was your take on sort of the main arguments in the SEC complaint?
Well, the main argument is this one around the common enterprise, that people, in the SEC's point of view, invest in XRP, not in Ripple, the stock, but in XRP, with the expectation that Ripple will take that money and then make their XRP more profitable. And that's just flat out wrong. When we started with XRP, I mean, for years it had very little value, and it didn't really matter to us whether it went up or down, because we were using it as a bridge currency between things. And so whether it was 100 of this or 1,000 or whatnot, we weren't really expecting people to hold much XRP other than to have enough liquidity to convert something from one thing to another. I mean, it was really a utility type function. Now, it's true that things that have utility may also be attractive to speculators or people who just want to hold something because they think it will go up in value. But that wasn't like why XRP was created. And there are many, many people out there that buy XRP for the same reason they buy Bitcoin, or they buy Tether. They buy it, they hold it. It may go up in value, but they're not necessarily counting on Ripple to make it go up in value. The fact that Ripple stock may perform in one direction while the currency performs in another is quite possible. And if we look at over time, the way XRP has performed, a lot of times it's performed in lockstep with other cryptocurrencies. It's independent of the actions of what Ripple the company does. And so people who purchase XRP, I mean, you could argue that, yes, somebody believed, like you could argue anything, that they believed that when they were buying XRP. I think the SEC has implied that some people thought they were buying shares of Ripple. But again, that comes down to like people confusing buying an ounce of gold with buying into like the gold mine itself. And I mean, you can have that view that people are essentially all widows and orphans, and they can't make any decisions for themselves. I mean, that's been the classic one with why we don't let retail investors invest in anything other than public companies. But come on, this didn't happen overnight. This has been going on for 8 years, and there's like 1,000 other currencies out there that have been around, and the SEC could have at any time said, hey, look, all of you, or any of you that do X, Y, and Z, that is like a security. Like, this is what you need to do so that people don't confuse the stock in your company with the coins that you guys create. But the SEC has been, other than giving very vague and inconsistent, like, I can't even call it guidance, just sort of hints, right, and sentiment that they might come around with a club one day and pick different folks to to whack them. I understood when the SEC was going after scams, but if you read their 70 plus page paper on Ripple, almost everything in there are complaints about things that Ripple did in clear, plain sight, things that they said publicly. It's not that they did things surreptitiously, it's that they were so public about what they did, right? It's not about like, well, what's going on behind closed doors. And so that concept that it is an investment contract, that people were investing in XRP with an expectation of profit. Look, everybody hopes that when you buy a house or you buy, like, it'd be great if when I bought a car, I knew it was going to be a classic and it would go up in value. But it doesn't mean that because I bought a Ferrari and I have an expectation that Ferrari will win Le Mans and drive the price of Ferraris up, that it's a security when I buy a Ferrari, or any of a whole host of other instances. And again, it would be one thing if there wasn't a security. There is a security. And so this really begs the question, how in the future can there be companies that are securities that create things that aren't, that people can hold and have utility and do things with? And this is really critically important to, like, I'll just use the concept of Filecoin. Filecoin is a distributed database. It's like a distributed version of Dropbox. Means that, like, my files might be on your computer, your files might be on my computer, and we have a token to reward one another for storing files. And it's super efficient. It's like 10 times more efficient than Dropbox. And so the fact that there's a token for paying for this, like, and I need to use this token to pay for storage or get paid for storage. Obviously, if I'm holding that token, I'd rather have it go up than down, but I'm not like looking to Filecoin to like make the value of my tokens, go up, right? So this concept of understanding the difference between a venture where there's a company driving this versus, like, for the US dollar or the British pound or the Japanese yen, if I'm a citizen of those countries, I hope that my central bank, my government, doesn't do crazy stuff that makes the value of my currency collapse. I do like it if my currency is stronger, so that when I travel, I can buy more stuff, but that doesn't make it a security, just because I hope that whoever's associated with it doesn't do crazy stuff that makes it go down rather than go up.
Well, you were a chief risk officer at Ripple in the early days. On Twitter, and I was at Ripple for a little bit back then as well. On Twitter, a lot of people have been pointing to one part of the complaint as sort of the smoking gun that Ripple got, sort of this legal assessment, maybe around 2012, 2013, that said that there were risks that XRP could be seen as a security. Do you remember that? Because I remember some discussion about that internally, but do you recall that?
Yes. So look, like, this is the crazy ass piece of this. So, like, as the chief risk officer, like, risk has two pieces to it. There's the likelihood something will happen, and then the consequence of that thing happening. Okay. Right. Those two things together equal risk. I mean, you can have things that are really bad, but they're unlikely or never will happen. And then you can have things that happen all the time, but the consequence isn't that bad. But you put the two together, that's what risk is. And so for any creation of a new thing of value, right, if you were a risk manager, whether you're a legal or compliance or like whatever, there's always some risk that anything you create could be like considered to be something by somebody, right? Like when we created XRP, yeah, it could be a commodity, it could be a derivative, it could be a currency, it could be everything is possible. So if you don't acknowledge that there's a possibility of something, then you're really not doing your job, whether you're a risk manager, a compliance officer, or a lawyer. So yeah, everybody can have an opinion. That doesn't mean that it's right. It's difference between like fear that something could happen and there being like a good reason for it to happen. And so identifying risks should not be paramount to like being culpable for when that risk actually materializes. And so simply, if you did that, you'd never get out of bed in the morning. Like, I could get hit by a car going to work. Like, yeah, but take precautions, do things in a correct way. And in the case of Ripple, if you go back and you look at all the original decks that we went out with, we were talking about it as a currency from day one. And I mean, that was always the aspiration and the intent. And really what we were trying to do was manage the currency like a central bank would manage a currency with responsibility. You don't want to debase the currency. And so, I mean, there are commonalities between what a central bank does and what a corporation does in terms of being a good shepherd for their flock of the things that they produce. And so, so simply acknowledging that there is a risk doesn't make you like culpable. Like I acknowledge that there's a risk that when I actually ride a bicycle down a hill and I pump air into the tire, that I could have a puncture and it could like collapse. And like the company that made the tire for me or the tube, like they're aware that there's things out there, they're called like, glass, and they could cause the tire to puncture. And so the company acknowledging that, you could have a flat tire doesn't necessarily make you culpable for every accident that happens when somebody gets a flat tire. And so the whole concept of a regulator, the whole concept of having referees at the football game is they don't write the rules 8 years after the game. We're not going back with referees today and like re-adjudicating like the 2013 Super Bowl, right? Like, okay, the rules are there at the time. You interpret them as you go. And if you are silent about whether something is of currency or a security, and then suddenly, 7 years later, you like your ears perk up and you throw this over the wall. Okay, that is one way to regulate. That's one way to referee a football game there's a reason it's unconstitutional in the United States to have what are called ex post facto laws. You can't make something illegal after the fact. That's a fundamental principle of the Constitution. If ever there was an ex post facto situation, it would be here. It's one thing when like Telegram is in the middle of doing an offering and they're like, the the SEC is trying to figure out like whether the two-part investment sequence of like first round investors that are accredited investors selling to second round investors who aren't is a problem. That was happening in real time. This is 2020. This concept of like Ripple and selling some of the currency and selling some of the security, this didn't happen just starting yet. This started happening in 2013. And it was in plain sight. It was 4 years before the ICO boom. And so that concept of timing and then this hurry up thing on the last day before you leave, when you've had like 7 or 8 years of time to clarify what you want in terms of disclosure requirements. And really, if you look at what this legislation is about, this 1933 legislation, it's about disclosures to protect investors. And I think disclosures are great. I don't think there's been a company, more than Ripple that has had more to say publicly about what they're doing. If you want to change like what those disclosures should be, how frequent they should be, what people should disclose about their private holdings versus what the company is doing, like that's fine. Change the rules, make it a standard for everyone. But just do that in plain daylight as opposed to kind of this nip and tuck type thing where you're going to like, I don't know, it's basically enforcement and regulation by shaming, right? It's a shaming process. And look, I'm not here to whitewash every single thing that Ripple did. Like I'm a human being. I had my own ideas and arguments of like how I would run Ripple if I was king, but I wasn't king. I had a role. Chris and Brad have done what Chris and Brad do, and other people like yourself have all played their role over the years. And everybody can quibble, coulda, shoulda, woulda done, like Monday morning quarterback. But that's a lot different than just throwing a whole company and all its investors and possibly the whole industry under the bus. That's a sad situation.
Yeah. I talked to one ex-Rippler, and one of his assessments was that the complaint seemed surprisingly personal relative to other lawsuits that he's gone through.
Yeah, that does seem, it does seem particularly galling in that regard. And again, I don't, at the end of the time, when somebody tells me, I remember, that it's not personal, that's kind of like when you better look for your wallet and stuff. So I don't have any insights as to why again, I read through the document and it reads like, like the Kristen Brad show, and like why that has a place in public policy is beyond me. That is not my concept of how regulatory organizations work. It has been a little bit different the last 4 years. There has been a lot of personalization in terms of how the organs of government are used to achieve and settle personal scores. But I don't have any understanding as to like why there's such a heavy personal element in this filing either.
I feel like we've outlined maybe the potential positive outcome, right, as an opportunity to provide real clarity finally and provide the industry sort of this path forward. What's sort of the worst case scenario here, right? If the SEC gets what it wants, if XRP is labeled as a security, if Ripple is duly punished, what's sort of the worst case scenario? What do you see as the fallout? Is it really possible that Ripple sort of moves its HQ out of the US and operates elsewhere? And how does the rest of the industry respond to that?
Well, the worst case is just a continuation of the SEC behaving the way it has, where it does not issue clear rules. It basically takes a Tony Soprano approach where we take down anybody that like challenges our authority. It's really not about the rules or the principles, and it's just about like who's the boss of who. And so, and this malaise spreads from Ripple to many of the other companies and all the other innovators, investors, consumers that have been tried to basically create new forms of currency, new forms of tokens that achieve different kinds of value, whether it's Brave trying to create a token that creates a new way of exchanging value between users of browsers and content creators, or Filecoin, or a company like Nodal that's creating tokens for basically having like monitoring of the Internet of Things, like all these different innovations. If they're all forced to operate under a cloud where whatever they create is perceived as something that's too complicated for a normal person to understand, and therefore they have to be under the burden of being the equivalent of public company regulation and disclosure. What that means is the only people that have permission to innovate are companies big enough to meet public company disclosures, which essentially slams the door on any innovation by anyone other than large corporations. It's a world of innovation by permission only. That would be a terrible outcome here. Or that would mean that innovation has to leave the United States and can't involve Americans holding and using those instruments. And so it's really hard to imagine a type of innovation where something works everywhere but in the US, because if an American touches it, the long arm of the law, just like it happened with Telegram, means that even if you're not an American company, which Telegram was not, those founders would forever have to worry that when they got onto or off of an airplane, someone was going to yank them off that plane and extradite them to the United States to face, securities violations and stuff. And so if that's the game that's at play here, the extraterritoriality of the United States, where we can make our rules apply anywhere else in the world, but of course, nobody else's rules can apply here in America, that vision of America, that sort of arrogant vision that we can actually force everyone else to play by our rules and we don't have to play by theirs, that's a problem. I mean, that was one thing when America was so powerful economically and militarily, they could get away with that. But, we're just not as powerful as we used to be. And we're kind of living in that illusion that we can make everybody else play by our rules and we don't have to follow anyone else's rules, that there's this American exceptionalism that will allow us to basically always have tailwinds at our backside and not have to not have to
Right.
like play in a global world by like global rules. And so
Sure.
again, we're less than 25% of the world's GDP. We probably can still like muscle people around for some time, but doesn't matter. Republican, Democratic administration, there may be a time when we have to like take stock and not be quite so arrogant about our ability to like force everybody else to play by our rules.
Right. I mean, it just really seems like a situation where it's very easy to name the people that are hurt, how it hurts innovation, how it hurts, retailers, etc. I mean, Coinbase, I think, was just sued by a guy in Missouri um, for selling XRP now in light of the SEC complaint. Um, but it's hard to pin down, right? Like who really benefits from all of this. Something we've talked about at GlobaliD too is using some sort of token. It could be XRP as part of our platform, whether that's for moderation, spam, etc. And this sort of puts a cloud on our innovative potential as well to a degree. So hopefully it doesn't go that way. We'll see, I suppose. One of the last things I wanted to just ask you was, and because this is sort of the maybe more controversial arguments that Ripple has made, sort of stoking the nationalistic fervor, saying that they're an American company headquartered in America, but Bitcoin is owned by the Chinese. I guess because of the mining pool concentration over there. What's your take on that?
Yeah, I mean, that kind of flag waving stuff doesn't really do it for me. I mean, I'm a very patriotic American, but that just seems a little too flag wavy. I look when we get down to that level, that does feel a bit too desperate to me. It may technically be true, but that's really not the point. I mean, to me, hats off to all the different innovators and all the different ways things have done. Like Bitcoin has its own story. Ether, like everybody has like a founder story. It is unfortunate that the U.S. is, rather than celebrating its founding stories, is basically taking a big dump on the top of like innovation that is domiciled here. But I'm not gonna rain on anybody else's parade just to like. I want the clarity with Ripple and the other crypto companies that have created something of value to stand on its own merits, and hats off to like Bitcoin and Ether that they like made it out the door, and it's like the third person out the door or the third company out the door, Ripple, like the welcome mat has gotten pulled back. Like that's terrible, but I'm not gonna
Yeah.
kind of show envy about the fact that Bitcoin and Ether made it through.
And I think what drew me to Ripple and XRP as well is because it's unique, it's something different, and I think it's good that we have all these sort of different approaches in the ecosystem. So,
Yeah, I mean, I'm long in all those. I mean, I'm every single currency I've mentioned today is something I'm long in. I'm extra long in Ripple because I mean the reason I joined Ripple, early on was there was something to join, and I never would have thought that the fact that there was actually something to join would actually then make it a vulnerability that someone would say, well, because you guys are working together in such a coordinated way that you can't have a currency that isn't an investment contract because you guys are so organized. It's like it's the ultimate screw you message to say that if you guys actually get it together and do things like with real Silicon Valley kind of like capital and coordination, teamwork, etc., that everything you produce or anything you produce other than the stock has got to be a security and investment contract. You can't create a competitor to like Bitcoin or Ether that has its own characteristics because we're just going to turn that into a security. You're not allowed to go and play in that game, and that really burns my burns my butt, because once again, that's that message that, it's better. Don't get out of bed in the morning. Just pull the covers over the top of your head, because like the world is full of dangerous and bad things, and people can't go out and make responsible decisions for themselves. Everybody is a widow and an orphan that can't deal in the world of risk. And so that message coming from the SEC, to me, is a real perversion of what was a good intent of the SEC in the first place back in the 1930s, looking out to protect folks from scams and whatnot and have disclosure. But it's gone from this to this situation now where companies and innovators are totally fearfully looking over their shoulder for fear of like getting on the wrong side of a regulator. And to me, that's taking something that was fundamentally pro-consumer, pro-investor, and turning this into a Tony Soprano kind of world where, like, he's there to help when you don't really need the help, right? And he's really there just to take a cut. And what I think would also really be terrible is if the settlement of this is, rather than getting clarity of the rules, the SEC just like, takes a bunch more fines and shows that, hey, like we're taking in more money than we're spending. That's why we're like a good regulator, is because we're like earning our keep, because we're like shaking down the industry and like we're not costing anybody anything. And like that is not the kind of regulation I want to see in the world. I would love to see clear rules and standards. And in the last 4 years, the SEC has done almost nothing, zero on that front. And that is being like asleep at the switch. And so I do hope with the new administration that we get clarity, not just, we haven't really talked about it today, but like the SEC sat on top of all the, the electronically, the EFTs and stuff that could have come out during this era as well. They just didn't do anything. They just sat there. And so that's another form of obstruction, lack of clarity. They haven't really made it transparent as to what you need to do. And yet the world is begging for a trusted product in that realm. And so without that, people are stuck having to buy these assets directly. They can't just share in the, in this new industry in a way that doesn't require them to be experts, that doesn't require them to take direct risk of holding a particular new asset class. And so the SEC has once again done almost zero to help support responsible innovation. And I really find that a missed opportunity. But tomorrow's another day. We get a new administration in 3 weeks. We might actually get a situation where the new administration wants the regulator to create clear rules. And I'm a big believer in rules and regulation. It's like, would football be better or basketball if there were no rules? You could just use chainsaws. Like, I don't think so. It's good to have rules and guardrails and stuff, but it does require work on the part of the regulators. They do need to step up and issue guidance and issue rules and enforce laws, not just enforcement actions that are indistinguishable from like a Tony Soprano shakedown. That's the world that I think we all want to, or should all want to live in.
Yeah. I couldn't have said it better myself. And I think there's a sentiment that this is what people really want as well. I think you see like NFL players taking the bulk of their salary in Bitcoin these days. Like people are very interested. There's a lot of demand, and that clarity could help us all move forward together. So yeah, I think this is a good first episode.
All right.
I don't know, a good first podcast episode, Greg. You've shown a light on, a very charged subject that we're all very curious about. Do you have any other final thoughts on that?
Happy 2021 might be a bit different than pandemic 2020. And I am looking forward to the new year. And I am overall optimistic. I am I'm optimistic overall. I can't believe we're that we've had to start the year with end the year and start the new year with a gut kick. But I guess all I could say, if you've seen the play Hamilton, there's a song like "Want to Be in the Room Where It Happened," and so even though it's a big mess with Ripple, for any of those folks who've been part of that journey, it was great to be in the room where it happened and to see, what it's like in the sausage making factory. And I wouldn't trade that in for the world. I'm sure the folks that have been involved with whether it's Ether or, or Filecoin or Satoshi, wherever you are, wherever you're sitting out there, I'm sure you're sitting back and having a good grin about this. But I do encourage everyone not to just stay in bed with the covers pulled over you, even if that's what the SEC is telling you, is don't give up, go out and take risk and discover, ask questions, and encourage and engage with the regulators. So, we don't end up with this type of reactive, opaque behavior that we've seen just in this particular situation. Let's make this the exception rather than the rule of how proactive regulation can and should work. So that would be my message to everyone, including all the folks at the SEC, because I got to believe that their heart is in the right place. They just sometimes lose their way, and so I hope that this whole thing can get back on track.
All right, great.
All righty.
Yeah, so the plan for the podcast is to hopefully have a bi-weekly recording published.
Mm-hmm. Yes.
And thematically, this is going to be around, I suppose, your vision of, or the vision of the sovereign sort of individual citizen in this new digital world. Do you want to give a little spiel about that vision?
Sure. Well, the concept of self-sovereign identity, it should not be confused with a libertarian view, which is like, hey, the individual's on their own, everything is about the individual, and there's no role for like regulation or governments or corporations or groups or institutions. That's not what it's saying. It's just saying that if you got to design the world, there's a philosopher named John Rawls, and he talks about this concept of the original position, which is if you were going to design all the rules of how the world worked, you should put a blindfold over your eyes. And so you don't know whether you're a man or a woman, whether you're rich or poor, whether you're handicapped or healthy. You don't really know where you stand in the world. And you came up with a set of rules. You don't know whether you're the head of a corporation or you're a rank and file worker. If you did that exercise, you'd probably come up with a world that is much more organized around being people-centric, as opposed to like saying, well, let's give governments and corporations and big institutions all the power and treat people like ants. And so what it envisions is a world where we have rights, but also responsibilities as individuals, and we get to choose. We have free will. And we're not told what to do. We're more self-actualized. And so it's kind of like you hear that expression of like privacy by design, but that's a kind of a narrower concept. We're really talking about people's ability to choose and have free will in all areas. And so the world that we're looking for in the future is not a world that's controlled by like WeChat or Facebook or a particular government or whatnot. It is a world where people have control over their own identity, and yet there can still be trust in the world. If we have a challenge today, it's a trust deficit because institutions have failed us. They've created situations where they have benefited, whether from advertising models that are based on clickbait, where the proliferation of fake identities, fake news has and all sorts of identity theft and inability to tell whether you're trading in trafficked or stolen goods. Like this whole world has created a trust deficit. And so we're really looking at re-architecting where trust can be restored and the trust deficit can be addressed. And so how do we do that at a global level as opposed to having this be some sort of kitschy little tribal thing? And so you are going to have to figure out how to do trust at scale and yet still not make that like top down Orwellian. It needs to be, I call it little brother rather than big brother. How do systems actually restore our faith in one another in a practical basis at scale? And so some of the innovations out there, like whether it's in the energy industry with people being able to generate their own energy to offset their own carbon impact, that sounds very woo-woo, but if you can make that practical, so be it. And again, in the case of money, rather than having to depend on money only coming from like the US government or some other designated authority, or us only being able to use products where we like log in with like creepy Facebook, how do you basically get that back to a human level? And so all these innovations out there and these innovations in the crypto space have shown the way for one piece. I mean, the fundamental innovation that came with Bitcoin was that you didn't have to rely on a government or a corporation to hold and send value. And what that means is that any system built on top of that can be innovated without having to ask permission of a government or a corporation. And you might say, well, yeah, but a lot of those systems aren't as efficient, as scalable as what corporations or governments did. That's not the point. The internet wasn't efficient as a packet switching network compared to what the phone industry did, but it was interoperable. It didn't require permission to do things. And it ultimately caught up with and surpassed the telephone networks in terms of being a backbone of information society today. So efficiency isn't the only criteria. And so the fact that blockchain may not be as efficient as non-blockchain solutions is less important than the liberating impact of being able to innovate without having to ask permission. That can create breakthroughs that surmount the incremental efficiency arguments of people that say, well, you know, blockchain isn't that efficient. And like Ripple was a perfect example of that. It was more efficient and more flexible in many ways than Bitcoin. And like, we want to see more of those innovations. And so situations where things like that get a knock on the head, do set us back. And it is basically it's a rebellion against progress, that belief that you can like go back to like 1946 and the analogy of the fruit trees, or to kind of like slow down the creative and innovative energies of person kind. There's always going to be that kind of backlash out there, but I'm hoping that if you have people listening to podcasts like this and finding other folks, that there will be less fear of the future and more willingness to go there. And look, there do need to be guardrails. I'm all for guardrails. I'm all for rules, but let's put those out there as opposed to just whacking people on the head that are doing that thing, which is called innovation without asking for permission. That's kind of my like overall sentiment message. And it's a positive message. But look, I know there are a lot of people out there, there are certain organizations, and they are fearful. And they do have, there's a little poem that I think they might say each day, which is like, each day I hope and pray that tomorrow will be the same as today, that they're afraid of the change. And there's a big part of human nature that is fearful in that regard. But I'm hoping at the end of the day, people do get out of bed and go out into the world, even though bad things happen, and not live under the fear of someone saying, I told you so. I told you that if you got out of bed, something bad might happen.
Well, there you have it. And well, change is certainly happening. That's a reality. And that'll do for our first episode. Happy New Year, everyone. Thanks for tuning in, and we'll see you in 2 weeks.
Take care, all.